Let's shift focus to RITES, which posted a sharp drop in the net profits in the third quarter. My colleague Anushi had a chat with the management, and here's what they had to say on the company's growth plans going forward.
There is a dip YOY. This is in a sequential comparison. If you see, this is in line with our strategy, and in all our parameters, Q2 to Q3, the revenue's gone up, the margins have gone up by about 1%, and the EBITDA has gone up by about 14%. So sequentially, our focus of improved execution, and that will continue moving on to Q4 also, because Q3, we've had an all-time record. We've got an highest order inflow of about 1900 crores, and this is about 110 plus orders. So these orders have contributed to an order book of an 8,000 crore order book, which is an all-time high. So moving forward, the focus would continue on improved execution. And specifically to your point regarding next FY, since these orders will definitely start generating more and more revenue quarter one onwards, we definitely see the next FY to try and do at least a 20% growth on the current FY, both in top line and about a healthy double-digit growth on the bottom line.
Okay, Mr. Mittal, while the sequential growth is there on which you remain optimistic on the FY26 scenario, I want to understand, if you take a YOY comparison, what has happened in this? Why are we seeing this dip in the revenue in terms of where the exports are concerned? There were no exports which were recognized in this quarter, and mainly the quality assurance business, which is your higher margin business as well. So if you can give us an outlook on both of these segments.
Yes, you're very correct. So if you compare YOY, in fact, if you see total 9 month to 9 month, there's a hit of about 200 crores on the top line. And if you break it down, there's about 100 crores on export, 50 crores on quality assurance, and 50 crores on the turnkey. And this has contributed to a dip of about 80 crores in the bottom line, which is further, this about 40 odd crores due to the reduction in top line, and about 40 odd crores due to the reduction in the margins. Specifically to your point regarding export revenue, you see, export revenue, we started getting orders, fresh orders, after a gap of about 4 years in the last 4 quarters. So we have maintained our strike rate of getting a fresh export order in the last 4 trailing quarters. And now we have an export order book of 1,300 crores. So these will start generating revenue. You see, in export business, the revenue is realized only when the bill of lading takes place. And there is a average lead time of about 12 to 18 months before the product is manufactured and shipped out. So that's why FY25-26 will start seeing generation of revenue from these export orders.